In March 2023, one of the most important banks in the tech economy disappeared in less than 2 days.
Anatomy of a collapse of a big bank and the anatomy of a rescue from the federal government.
Report about the failure of Silicon Valley Bank.
A rough week for the banking industry.
The collapse of Silicon Valley Bank. The second biggest bank collapse in U.S. history.
Silicon Valley Bank didn't collapse because of bad mortgages or exotic derivatives. It collapsed because of speed. $42 billion was withdrawn digitally in a single day. Not by panicked crowds, but by founders, CFOs, and venture capital firms coordinating through private Slack channels and group texts. By the time regulators stepped in, the bank was already gone. That wasn't just a banking failure, it was a systems failure. It showed that modern crises don't spread through streets anymore. They spread through servers. To understand what's coming, you have to understand what is already happening. For more than a decade after the 2008 crash, central banks kept interest rates near zero. Cheap money became the default policy tool. Governments borrowed, corporations leveraged, asset prices inflated, debt stopped looking dangerous. By 2024, global debt had risen above $313 trillion, according to the Institute of International Finance. That's more than 3 times the size of the world economy. The United States alone owes over $34 trillion. The UK's public debt exceeds £2.6 trillion. Japan's debt is more than 2.5 times its entire GDP. Debt itself is not the problem. Speed is. In 2008, financial panic spread over weeks. In 2023, it spread in hours. Silicon Valley Bank had loaded up on long-term US treasuries when interest rates were low. When the Federal Reserve raised rates at the fastest pace since the 1980s, those bonds lost value. On paper, the bank was still solvent. But markets don't operate on paper. They operate on confidence. Once depositors realized the bank would have to sell bonds at a loss to raise cash, the race began. Digital banking turned fear into velocity. $42 billion left in one day. No institution can survive that. That same dynamic now exists across the financial system. Pension funds rely on derivatives. Hedge funds use leverage. Private equity stacks debt on companies. Shadow banking rivals traditional banks in size, but not in oversight. High-frequency traders move capital in milliseconds. When something breaks now, it doesn't leak. It snaps. And here's the uncomfortable truth. The next financial shock will not come from reckless lending. It will come from liquidity meeting speed. A bond market freeze. A derivatives unwind. A major sovereign debt scare. A geopolitical shock that forces institutions to sell at the same time. Modern markets don't just transmit risk, they synchronize it. That's the first part of the chain. The second part of the chain is technology, specifically artificial intelligence. In late 2022, OpenAI released ChatGPT. Within months, AI went from novelty to infrastructure. Companies integrated it into customer service, coding, research, media, finance, and surveillance. Banks began using AI to detect fraud, assess credit risk, and automate compliance. Hedge funds started feeding alternative data into models to predict market movements. But there is a problem that doesn't show up in product demos. There is no global governance framework for AI in finance, warfare, border control, digital identity, or cyber operations. The European Union has passed its AI Act. The United States relies on executive orders and agency guidelines. China controls AI centrally through the state. But globally, there is no binding treaty that defines where machines stop and humans remain responsible. And that matters because AI doesn't just assist decisions, it standardizes them. When multiple firms use similar models trained on similar data, they respond to stress in similar ways. In a market panic, that means everyone sells at once. In geopolitics, it means systems react faster than diplomacy can correct mistakes. In 2023, the US Department of Defense confirmed that AI is now integrated into battlefield intelligence and targeting support systems. China is doing the same. So is Russia. So is Israel. These are not experimental projects. They are now embedded in doctrine. AI reduces reaction time. But when humans are removed from the loop, miscalculation becomes automatic. This is not science fiction. It is institutional reality. In finance, AI models already execute trades without human approval. In cyber defense, systems automatically respond to intrusions. In warfare, AI assists in identifying targets. The danger is not that AI will rebel. The danger is that AI will obey too efficiently. It will carry out flawed assumptions faster than humans can intervene. That's the second part of the chain. Now, zoom out to geography. Crises don't start everywhere. They start at pressure points. The first is Taiwan. Taiwan's semiconductor manufacturing company produces the majority of the world's most advanced chips. These chips power smartphones, data centers, AI models, cars, and weapons systems. According to industry estimates, more than 90% of leading-edge semiconductors are made in Taiwan. If Taiwan is blockaded or invaded, global technology production does not slow, it freezes. US war games consistently show that any conflict over Taiwan would disrupt global trade on a scale larger than the COVID supply chain shock. The White House has openly called Taiwan's chip dominance a matter of national security. This is not theoretical, it is the backbone of the digital economy. The second pressure point is Ukraine. The war has already redrawn global energy markets. Europe has cut off most Russian gas. Fertilizer exports have been weaponized. Grain shipments have been interrupted. Sanctions have fragmented financial systems. This is no longer just a military conflict. It is an economic one. The third is the Red Sea. About 12% of global trade normally passes through the Suez Canal. In late 2023 and early 2024, attacks on shipping forced major carriers to reroute vessels around Africa instead. That added weeks to delivery times and billions in extra costs. Insurance premiums surged. Fuel costs rose. This is how geopolitics becomes inflation. The fourth is the South China Sea. More than $3 trillion in trade passes through those waters each year. Multiple countries claim the same territory. Surveillance is constant. Militarization is increasing. One misjudgment and global supply chains feel it immediately. And then there is cyber warfare. In 2021, a ransomware attack shut down the Colonial Pipeline, which supplies nearly half the fuel to the US East Coast.
Tonight, we're learning more about a cyber attack forcing the shutdown of one of the main pipelines supplying gas and diesel fuel to the East Coast.
Panic buying followed. Gas stations ran dry, prices jumped. The disruption didn't come from missiles, it came from code. That attack showed how cyber, energy, logistics, and psychology now intersect. This is what geopolitics looks like in the modern world. Not tanks first, infrastructure first. That's the third part of the chain. Now, connect them. A geopolitical incident disrupts shipping, energy, or chip production. Markets react. AI-driven trading systems amplify volatility. Highly leveraged institutions are forced to sell assets. Credit tightens. Governments scramble to respond. Misinformation spreads faster than facts. Public trust erodes. This is not speculation. This is how modern systems behave under stress. In 1914, One assassination triggered a war. In 2008, one housing market triggered a collapse. In 2020, one virus triggered a global shutdown. In the next crisis, it will not be one thing. It will be interaction. Finance will transmit it. Technology will accelerate it. Geopolitics will trigger it. And by the time leaders call it a crisis, the damage will already be done. The most dangerous part is not the systems. It's us. We are bad at recognizing slow emergencies. Climate change took decades to be taken seriously. Financial bubbles inflate quietly. Governance failures accumulate in bureaucracy. By the time they become obvious, they are already locked in. Politicians think in election cycles. Markets think in quarters. Tech companies think in product launches. But systems collapse on long timelines with short triggers. The next crisis will feel sudden, but only because we ignored everything that led to it. So, the real question is not what the next crisis will be. The real question is which one we are refusing to prepare for. Is it a financial shock we cannot backstop, a technology we cannot control, or a conflict we cannot contain? Because history does not repeat itself. It upgrades its methods, and the next global crisis will not look like the last. It will look normal, right up until it doesn't. The world doesn't end in explosions. It ends in decisions, quiet ones, bureaucratic ones, technical ones. And by the time the public feels the consequences, the people who made those decisions will already be explaining why nothing could have been done. But something can be done.